talk about what investors are looking for in Web3. And we have Kavita. I think in a bit, I'll let you all shortly introduce yourself. Delta Fund, right? You came from the US yesterday? Yes, very nice. We have Alex from Angel Block. Woohoo! You came from Malta yesterday?
That was top secret, but yes.
Fantastic. Also short introduction a bit. And then Tim, how do I pronounce? Is it Deus X Capital?
Deus X Capital.
Yeah. So he used to be Galaxy Digital. He used to. And you came today from London. Very nice. Okay. So again, big applause to our speakers. Woo! And then just maybe 30 seconds, 60 seconds, each of you. Who are you? What are you doing? And then we're going to talk much more about the topic of today. Kavita.
Hey guys, I started Delta Blockchain Fund. It's a $125 million fund with 65 million approximately to pre-seed and seed, and the rest for follow-ons and growth. I also teach at Stanford Beyond Bitcoin class. Apart from that, I think I've been in the space since 13. Very excited and very lucky to be the first checks into really amazing companies building in blockchain like Polygon, OpenSea, SuperRare, SoRare, Starkware, and bunch of them. So excited to be here. Thank you, Victoria.
Thank you, Kavita.
So a lot of rare and where.
Yes, and they're still rare.
Hey guys, first of all, thank you for coming out. I'm barely hanging on, so I know some of you are probably dead as well, but I really appreciate it. My name's Alex. I'm the founder of Angel Block. Angel Block is a non-custodial fundraising protocol. So it's the first time where we can actually conduct token-based fundraisers that are fully non-custodial. Investors have more of a say when it comes to development. We want to make sure that startups are actually following through with their roadmap. It allows for pretty cool checks and balances in the whole system, but not here to shill. My background is predominantly centralized exchanges. I'm an LP in 2 funds, and I do a lot of angel investing, so I think it's going to be a fun talk since you guys bring more of the institutional side. I'm a bit more active on the angel side, so we'll see how that goes. Tim.
Good afternoon, everyone. If you're struggling after one day, I can't imagine what you're going to look like tomorrow morning.
It's not going to be pretty.
Yeah.
I can tell you that.
I've got a 9:30 panel in the morning, so if I'm out at midnight, you tell me to go home.
Yeah, very important.
Which I will roundly ignore. As Victoria said, I used to run Europe, Middle East, and Africa for Galaxy. But now we're very exciting. About 3 weeks ago, we launched Deus X Capital. We're a $1 billion fund. We've got private equity, venture capital, venture building, and we allocate to funds as well. So we're doing a lot in the space. And there's a lot going on in the space. So let's talk about it.
Very nice. Thank you. Okay, so my first question is, because we all know we are in a bear market, so are investors still looking into Web3? Or is it now not so hot? Is it now AI? So what's going on?
Actually, it's just very funny. Tim and me were just talking about it. Bitcoin prices just went up 10%, and absolutely everybody is asking back, what are the cool deals? So, no, I think the blockchain native funds have always been deploying. Like for us at Delta, we have been deploying. We are right now in the middle of 2 deals, closing them legally. We closed 2 deals last month. But yes, there was a huge narrative where suddenly everybody's like, oh, now we are also investing in AI, even if they were the blockchain fund. And then the AI whole spike didn't really become that much of a spike, and people were like figuring it out. But if you are here to build, there are amazing, amazing funds who are very blockchain native, who really believe in the technology, and who are absolutely deploying, but with the right mind on their head instead of getting into the FOMO of craziness as we saw in 21.
I'm still wrapping my head around this because we've been building through a bear market. We've raised in a bear market. I'm definitely still personally writing checks, but they're smaller than both of you guys. It's tough. It's like we've actually had many conversations with various VCs. We're getting ready for a Series A, probably Q1 of next year. And there is a lot of bullshit on the market right now. There's a lot of like, oh, how are you guys integrating AI? Like we're not. It's not part of our roadmap. It's not part of our business model. It's not something we want to do. Obviously, there's a lot of crypto companies that are doing ChatGPT wrappers, and suddenly, you have a chatbot on a DEX or something else, and you're AI powered. If it works, more power to you. But there is interest, funding. I think it wouldn't be really fair to say like, no, everything's peachy, everything's gravy, because funding has been pretty dry these past 2 years. Especially like we talked about this, Kavita, on a call. We talked about it, I think, a bit last night as well, where if you look at total funding in crypto and you compare it to the last bear market, so let's say 2019, let's say that 2023 is this cycle's 2019, kind of. You had, I think, January in 2019, you had approximately like $500 million worth of deals made. You had approximately like 200 or 190 million dollars in deals in August, and this August I think the whole crypto market did something around like 283. So if you look at it from a market cap perspective, our market cap is at like a 4 or 5x to what it was in 2019. So funding is lagging behind. Hopefully price appreciation of Bitcoin is going to go up, but there are some problems, especially if we look at Celsius, we look at Luna, we look at FTX. We had a great exodus of talent that I know some of them personally after the FTX implosion, because if you've been in this space long enough, I think a lot of people are getting really tired dealing with the same BS year in, year out. And I think some funds have reached the same conclusion. I mean, after FTX imploded, didn't Paradigm just scrub everything from their website? They're fully focused on AI. If it works for them, great. But we do have to take into consideration that the tides are changing, and it's very hard to say what the fundraising market is going to look like next year. Like what are the narratives that are going to emerge, and who are the kind of top players that are going to emerge, because some people are just pivoting, which is normal, but it's something important to keep in mind.
So, Tim, before you go, I just want to answer Alex quickly. I think the Paradigm one, whatever happened, they went public and said that was a mistake, they're back, and they are completely focused on blockchain. They, in fact, they decided against even expanding it to AI because they raised based on the idea of blockchain. So I don't know what internally, externally happened there, but that's the narrative which was corrected publicly. At the same time, the numbers which you're talking about, I think some of those numbers are reference to the Galaxy VC investment report. And we did a piece in Decrypt about that, where we said that what's also happening, and I'm not saying that there is not a major percentage difference between what's happening in 21 versus what's happening in 23. That's a standard across every technology in the bull and the bear market. But also the numbers which has been reported are not absolutely correct, because a lot of but they are not correct
100% correct
with 5 or 10% difference. There's a huge difference. The reason for that is a lot of our own portfolio companies who have raised $3 to $5 million have not really gone out in the market, have announced the fundraising. It just didn't feel like the atmosphere for a lot of people to go and announce or to cover their whole raise or doing the extension round announcement.
Yes, but unless it's 100% differential, then there's still a pretty large discrepancy when you're looking at total market cap.
Yeah, but nobody is going to question about 21 to 23, right?
2019, yeah.
So I guess the exam question is, are investors still interested in Web3? Let's go with, what's Web3 anyway? Right, let's start with that. Like, I know there's some people who fervently disagree with that terminology. I couldn't care less. I just care about what I actually see as an investor. Like, you call it what you like, but like Web3 is a pretty big category, right? Whatever way you cut it, right? So I think it's a tough question to answer as a broad categorization. Second thing, actually, Kavita, I think you're right? There's this, we're in this incredibly reflexive market. This term that was coined by Soros, this reflexivity, and I just think you have to see what happened this week. And it happened in January, and it happened in April, and it happened like in size on Monday. Is this sort of really dramatic sensitivity to the spot price of pretty much everything in our space? And not even, like when I say the spot price, it's the spot price of Bitcoin. Like, what a strange space that we've all ended up in, where the entire barometer of happiness, how many more happy phone calls did you have on Monday than on Friday? Like, the index was legitimately higher because everyone's got this energy level. And so that reflexivity, which is really a liquid markets reflexivity, has crossed over into the investing, into the less liquid investing space. And so there is this sort of 1 week it's this and the next week it's that. And as far as I'm concerned, if people are flip-flopping that quickly, and people do, then they're not serious players. You need to have a thesis, you need to have a belief, and the belief has to be long-term in the majorly transformative potential of Web3 and all the things that it represents, blockchain, digital assets, now you put in AI, and all of the rest of it. So, a metaverse, etc. So, I think, are people still interested in Web3? Yeah, I'm investing in it right now, right? Like everyone here is, so the investors are. But I think what's going to happen, Kavita's spot on, is like we're on the brink of that suddenly becoming an amazing, like, oh, we're all back in blockchain and Web3 again. But the truth is, anyone worth their salt was never out.
Very nice. Thank you. Well, I think I already told all of you, I think it's fun if you don't agree. And so if you do agree, it's fair. But if you don't agree, it's even more fun. So thank you very much. So there is still hope, okay, guys? There is still hope. Okay, let's continue a little bit with the I would say, sad questions. So we are, again, in a bear market. So do you see this bear market as different to previous ones?
I think this is where we disagree again, right?
We disagree. Yeah, we disagreed on most of the stuff, but we still had great dinner together. So for me, it is. Because for me, I look at it as the third cycle of the bear market in my personal experience. In around 2014-15, for me, that was the first bear market, when suddenly everybody was saying Bitcoin is completely going to be illegal. It came down to like literally like single-digit dollars, and like there was a lot of craft around it. Then 16 with tokens, ICO sales on Ethereum, everything got picked up, and 17 was great, 18 mid was great, and then 19, I would say, was the first real technology bear cycle. Because instead of just prices of talking about ETH going to $76, Bitcoin coming into 3 digits, I think what was interesting was 17, 18, we started investing into first time a lot of technology-based products, not only layer ones, but layer twos, a lot of exchanges, a lot of decentralized products at that point of time. And we suddenly saw an exodus of talent going out of the industry saying, this is just not going to survive and nothing is going to happen. But this time, the major difference which I see, of course, from the price perspective, I say we are on a very decent, reasonable, low point, which has been maintained fiercely by both ETH, Bitcoin, and a lot of other factors. But for me as a tech investor, what's really fascinating is builders continues to build. I didn't see an exodus. I didn't see that if I invested in 100 projects in the bull cycle, 90 of them have just disappeared. Barely 1 or 2 have disappeared. And we still see so many experienced builders from Web2, from different spaces, people from cryptography, double PhD, still coming and building in the space. For me, that's the first experience of a tech build cycle in crypto.
Yeah, those are very good points, and I agree with them. Sorry, Victoria, but I agree. But kind of the flip side of what Tim said, which unfortunately I also agree with, is Tim mentioned that any investor worth their salt, like, doesn't matter, bull bear, you're allocating, you're investing, and I think one of the main differences that I'm seeing is we have this shiny thing called AI as an alternative now. But on the flip side, it's if you're building in crypto, you pivot to AI, are you actually worth your salt as a builder, right? Where is your conviction if you're so easy, just because valuation, because let's be frank, AI valuations right now are like ludicrously high, right? Those rounds are as overcrowded as like peak bull market crypto rounds were. So, we have that shiny coin that's kind of the other side of the room that people are going to. But that's totally different. I personally feel like this was a very, very tough bear market. I don't think, like in 2018, 2019, we never had those existential crises like, is this ever coming back? Is my favorite coin going to go up again? We had less of that. We had less chop. 2018, 2019, just from a trading perspective, it was very, very choppy at times. Like, and if, again, what Tim said, price appreciation, like there's no better way of maintaining positive sentiment than just price going up. And if prices go up, everybody's happy. In 2019, like even some of the traders left. Like that's how bad it was. Traders left just because, like they rather go back to options. They rather go back to stocks because we had low volatility, low trading volumes, and it was just boring. It was a very, very boring market.
So a general theme of this bear market has been a lot of underqualified people getting carried out on stretches because they had no idea what they were doing when it came to risk management. That's just one example, right? Like, I challenge anyone to disagree. Sam Bankman-Fried is the ultimate example, but it's like that's very idiosyncratic to crypto. And I think the thing is, you've got to take a big old step back. If you look at the history of crypto, every bear market before it was only idiosyncratic. It was mainly not driven by external factors. But actually, the thing that made the ill-advised, young, inexperienced people who blew up Three Arrows, Luna, FTX, and every other stupid story that came out last year, that was just annoying for those people who actually spent a career building actual skills through real bear markets, like 2008 and 1999, 2000, right? Like, how many people were alive then in this room, like in this space? They just didn't have that. But what happened was those people got caught out by macro factors. That's really what happened, right? Like what happened last year, this wasn't it wasn't driven by a problem in crypto at the beginning. It was driven by a problem in classic financial markets that tripped up all the idiots in crypto. And so this is a macro bear market. The lack of investing that we're all referencing in the last 2 years is mirrored in traditional markets as well. Like anyone trying to raise money in the last year has had a real challenge, no matter who you are, no matter what sector you're in, except if you're in AI. So is this a different bear market in crypto? Yeah, it's totally different because it was driven by massive macro factors, and we're still being driven by massive macro factors. But the exciting thing about it being different is now we've gotten all those idiots out of the game, and you need that shakeout, right? That's a law of the jungle. Shake people out. You get off. You don't know how to play the game, leaving people, hopefully, all of us in here, who do know how to play the game. So that's the difference, right? We're going into, I think, a much more sophisticated, institutional-led next leg, and that's really exciting.
Thank you. Okay, good answers. Okay, so my next question is about how you analyze projects and startups. So what metrics do you look at?
I think I'm just going to give the comparison regarding the bull market and the bear market, because I truly honestly feel that the metrics also changes when there is a lot of FOMO going on, both for the VC and the founders and the other side. So, and also I feel like when I first started 17 to like officially institutionally invest in the space, I came from years of investing at World Bank, IFC, Google, ex-CEOs, family office, bringing the Web2 ideas of how to use the parameters of investing. And I realized very early on they didn't work in Web3 at that point of time. Like I couldn't come in and say, give me a very clear product market fit, give me the revenue at that point. And especially the tokens were so new, even company like till today, Polygon, with respect to its subscription model or its payment system, it's not profitable, but at the same point, from its token perspective, it's sitting on a lot of treasury. So there was a whole new dynamics to it. So at that point of time, the metrics used to be is this going to really push a boundary in something in a decentralized world? By the time we reached 2021, there has been a lot of product market fit set up. There has been also a new stream like DeFi within NFT, the DAO systems and everything. So you're still going somewhere in the middle of, it's a complete new idea. It may find a product market fit. If it does find a product market fit, it's going to have a revenue. Or the incentivization model is strong enough that it never has to find a revenue stream and the incentivization itself will take away. I think as we are moving with seeing some of the biggest blunders of the crypto economy till today, as Alex mentioned, whether it's FTX, Luna, and a lot of things, most of the investors or most of the seasoned investors are back to asking the idea of product market fit with revenue, even if the tokens are associated with it, because the pure incentivized model has not really worked for anything for a long term. And beyond that, beyond just Web3 crypto native use case, also beyond. But one most important thing, which I'll just add in the end, is something which I personally, even myself, have never asked, is the transparency to the holdup of treasuries for all these founders. Where are they managing treasuries? Are they using it to actually put in just into DeFi and earn yields? Or they are using it for payrolls and have a dashboard associated with it? With that, I would just say we are maturing. We are still not there yet. There are a lot of hard questions in a Web2 deal, which we still don't ask in Web3, but we are getting better.
Yeah, metrics in this space are kind of ironically, they can be kind of tough. And I definitely agree with Kavita that I personally look at different things in a bull cycle and a bear market. One of the things that comes to mind is, some of your favorite projects have bought Twitter followers, right? So what is their community? It's not the 30,000 people on Telegram that are spamming hi. So that's not a real user. It's not the 120,000 followers that they have on Twitter, because those are all bought. So it really comes down to harder metrics that do show product market fit in some way, but those can be a bit iffy as well. And if we look at something like Arbitrum, great L2, right? No questions there, absolutely. And they're, more power to them. They're smart for having done this. But if you guys remember the Arbitrum airdrop, you had a sharp decrease in the usability of the network after the airdrop was actually claimed by users. Like, it was like 70% drop. Yeah, exactly. Thank you. 78.2. So, if you're investing at a stage when the airdrop is announced, you kind of do need to take it with a pinch of salt. Like, okay, but you have people that are trying to sybil this. These are not real metrics. One of the larger personal checks that I wrote in this bear market was for a DeFi protocol. It was more or less a year ago, which is, I know it's going to sound super degen, but it's under collateralized lending, which it's a space I'm excited about. Like, I think it's the next natural step, especially in crypto. But they launched their beta on-chain, on Avalanche, having only gotten 300K from Ava Labs, which is super exciting. If you can launch a beta with 300K grant, like, I'm bullish on you. In January of this year, when they launched, they had a TVL, so total value locked, of 22 million. So I know those founders, they don't have that kind of money. They're not, spoofing their own TVL, which is really cool. And it's a really cool sign in the depths of the bear market that, yes, this probably will achieve product market fit, and it's looking good. So it's really, I think each startup, you do need to do a deep dive and kind of understand, like, who are the actual users? Because it's not Telegram people, it's not Twitter. Are people actually putting money, if it's a protocol? Are they putting money into this? How many participants are there? And it's going to be different, because in a bull market, like even some top tier VCs, you're still fighting for allocation because euphoria is high and you just, next shiny coin, not saying anyone here, but those are the realities of it. It just happens. It's unfortunate, but I think people just lose their brains a bit in a bull market, even the most seasoned people.
Yeah. Don't they just? So I've made a career out of trying to appear clever, but I'm not actually that clever. So I have to distill things into things I can remember. And so here's my personal rubric of 3 things that I look at whenever I want to invest in something. But it also is like a partnership or an acquisition or something, like any kind of big commercial deal, 3 things. 1, people. 2, commercial. 3, structure. So people, if, by the way, it's gating. If you don't get through the first one, you don't go to the second one. So the first one is people. I'm extremely values driven, mutual empowerment, professional ethical integrity. You know, these things matter to me. And so if I can't feel that I'm on the same wavelength of the people I'm going to invest in, if I can't talk on a level about what we're trying to do, if the deal atmospherics don't feel right, there's no point talking about what they do and what the structure is going to be, because it's just not going to work. And I think one has to be recognized that I'm a particular kind of character. And so I'm only going to appeal to a certain type of investee. So that's the first thing. If that works, if we can have dinner, if we can solve problems, if we can think about the future in the same way, we're good to go. So that's the first one, and by far the most important one. I will not invest in something if I don't trust and feel the energy with the people. And I don't think there's enough of that. But if, you know, a great deal won't work if they're a bunch of assholes. This doesn't work for me. Or people who just aren't aligned with me. That's, you know, goes 2 ways. Secondly, that's simple. That's everything. Mostly, like a lot of what Kavita does, like all the really important stuff you just have to get right. Product market fit. Is it well managed? They know how to run their finances. Do they have a clue about what it means to build a company and grow a company? Is the strategy right? Do I believe in the thesis? That's the second bucket. If you get past the first one, that's where all the work is. And then if you get to that point and you're like, I love these guys and I love what they're doing, then you have to get the structure right. And if the valuation's wrong, then I'm walking away. Like I'm not going to, you know, and so those 3 things have to happen in order for an investment to happen or a partnership to happen. And I found that to be an extremely reliable barometer of when to go in and when to get out. So that's my rubric.
If I can just jump in real quick, because I feel like a lot of people are in this room will probably be, you're either finishing raising or you might be raising soon, is what Tim mentioned, it sparked something in me, and it kind of brings back the first things that we were talking about in this panel is you have a lot of, because crypto is so liquid, you have a lot of investors, and I'm not talking VCs, I'm talking even angels, who have forgotten their place and they call themselves investors, where they are simply highly speculative traders. And there is a lot of them. And personally, I do believe these are the pariahs of this space. Just because crypto is 24/7, crypto is super liquid, doesn't sleep on weekends, you have people that will force early unlocks, they'll force lower token prices, and those are usually people you should stay away from. And especially in a bear market, when there is less funding and you are more inclined to take those BS deals, and those are usually the kinds of deals that can sink your project before you even really launch. Or it's just gonna make it a hell of a lot harder.
Agreed.
Okay, so let's talk about the future. Let's talk about 2024. So if you had to guess about the best sectors to get into, to invest into, or even maybe you're considering, I don't know, changing from one company to another company, what are the hottest sectors we're going to see? I know you don't know. Nobody knows what's going to happen in the future, but please speculate. Please share your
Please give
ideas.
your financial advice to the audience.
Oh, yeah, it's not. No. Nothing here is the financial advice. Nothing.
Not at all a financial advice for all the SEC people sitting in the audience. With respect to technology sector, I think the most non-sexy products at the beginnings becomes the sexiest product at the end. So we continue to invest in a lot of infra. And when I say infra, it's like the non-sexy plumbing part, which I'm talking about. We have been talking about Web3, and I know because of the liquidity and the financial aspect of this technology, it has become so big. But we still don't have a single straight data analytics layer. We don't have Google equivalent. You can't really search in a simple way all the companies which are there, at which sector they are there, all the data which is crossing between 2 chains. So a lot of data settlement layers where our investment is going, analytics, security reporting, observation tools, also the double or the triple swappings without having a multiple gas fee or without having a multiple user interfaces associated with it. So companies like LayerSwap, which is associated with swapping across multiple chains with one press of a button, or doing liquid staking or staking like companies like NotStake, which is here, institutional staking, taking it to the institutional people. At the same time, companies like Airstack, which are providing indexing much more like a Google Excel layer. So a lot of, for me, the things which is really going to be the biggest unicorns out of the space are going to be those mid-level SaaS products.
So, you know, we're probably going to be wrong on some of this stuff, but usually looking into a bull market, which it looks like it's around the corner, hopefully, fingers crossed, there's always narratives that pop up that nobody expected. So I think it's very important to keep an open mind and not just don't be too ride or die with your investments that you've already made in the past, year or 2 years, 3 years. Obviously, it looks like L2s might be the L1s of last cycle, just from a strictly speculative standpoint. I'm not the biggest fan. ZKs, zero knowledge, anything that touches zero knowledge has my interest. I'm a very, very big fan of Aleph Zero, which actually has private smart contracts. So a native private smart contracts natively on an L1 is something that I've honestly been waiting for 6-7 years, and it looks like it's finally arrived. So very excited about that. Personally, I think DeFi is ready for some kind of resurgence. I'm getting decks that are calling themselves DeFi 3.0 and DeFi 4.0. I never know what happened with DeFi 2.0. Like, we kind of had DeFi summer in 2020, and then we just kind of went to sleep on DeFi, and I kind of miss DeFi 2.0. I don't know what it is. If anybody here knows, please let me know. I'm really dying to know. So I think this resurgence of DeFi is something that I don't know if it's going to happen, but personally, from I think a more idealistic perspective, is something that I would really, really like to see. So I hope I'm right on that, but I'm not sure yet.
DeFi 5.1. You heard it here first. Web 5. Let's just skip 4. So actually, and rather annoyingly for Victoria, I'm kind of going to rephrase what Kavita said, because I actually, unfortunately, really agree. Like, if you take what I was saying before about the interesting part about this bear market being we've carried out a lot of really terrible companies out on a stretcher, which you need, leaving generally more healthy companies, but you've also got this institutional thing, and that's the theme I'd like to end on. You know, everyone's talking about the ETF in the US. Why? It's not actually because everybody thinks there's going to be like that huge element of like global capital in an ETF, in a Bitcoin ETF. Nobody's that crazy. What it really is about it's firing a gun on like, right, we're ready, the regulators are ready, it's time to go to the next level of institutional adoption. And the good news is, and this goes back to a bit what we were saying before, the institutional adoption cycle has been continuing underneath all of this. Look at what you don't need to look far to see an announcement from a very big global company about their commitment to this space. It's been constant, slow but constant. And I think what happens in this, what's this reflexivity is not lost on the largest wealth managers in the world, by the way. Their clients are saying to them, when this turns, can you bring us into this space? Which is why BlackRock wants to put an ETF out, because they want to be the place where that goes. But this is where I'm interested in where it goes. The logical next step is we get to see structured products tokenized. We get to see all the tokenization. People have been banging on about tokenization. I've been banging on about tokenization for 8 years, and we still haven't tokenized shit. Like, we really need to get to that next stage, but this is the moment where we start to see that happening. I think we've primed an awful lot of work. So who would I like to invest in? We're invested in Galaxy, Sabre, Haven, and Hilbert Group in Sweden, right? 4 regulated, crypto-focused institutional players. That tells you everything you need to know if you're building something that helps that institutional story, picks and shovels, data layers, integration layers for institutional finance, DeFi 5.1 integration. That's really exciting.
Surround sound.
With surround sound and a subwoofer.
Fantastic. Okay, just like 20 seconds each of you. This is, I think, quite difficult for all of us. I mean, doesn't matter if you are, I don't know, an individual or a company or, I don't know, part of a hedge fund. I mean, where do you get relevant, where do you find relevant resources for this space, right? Everybody says Twitter, but there's also so much noise. So where do we get like valuable resources and information to continue digging deeper into this space?
These conferences. Hey!
Yeah, that's true. Big applause. These conferences.
No, I think, you mentioned Twitter, and Twitter is a great space. And I think the first 5-6 years of being in this space is understanding who are the shillers, who's, like if your favorite influencer is talking about some coin, like, oh, might buy some here. He already has a bag. He or she already has a bag. Like it's discerning signal from noise. And unfortunately, Twitter is this giant cesspool that, you do find some interesting stuff, but it's very difficult. Like media is also difficult. A lot of the stuff that we read is PR, it's bought articles, not everything, but I think it's much harder to discern signal from noise in media than it is on Twitter. But I just think it's an experience thing. But going to these conferences, actually meeting builders, meeting VCs, don't just do deals online. Like talk to Kavita after this, talk to Tim. And just like actually learn like what their values are and meeting, like everything is so online. If you go to these meetups, if you go to, the ETHs of the world, like ETH Warsaw, which is, I'm originally from Poland, like that just popped up last year, and also bear market, and turned out one of the best conferences I've been to, apart from, EBC. I mean that genuinely though. I'm not just trying to shill here, but I think it's still undervalued going out and meeting people. And I know it's tiring. I look like death probably right now, but talking to hundreds of you right now is like, that's where you find your next investment. That's where you know what people are building, and not just, a branded Twitter post. Well, that's just me. I hope you have different opinions to make it interesting, like Victoria wanted.
Well, I remember when I got into this space the summer of 2015, and there was much less available then than there is now. And there was too much then. There was too much information online. I remember it's like, right, I need to learn about this blockchain. I've decided this is the thing. And I remember it was like, I had to make a decision then, and I've stuck by it since then. And I think it's more true now than then, because there's so much just impossible for anyone to absorb unless you have a whole team of people doing it for you, which I don't. It is the people, right? You have to get to those groups of people who you can not just go and ask for their views, but like you got to debate them. Like, these sorts of questions are valuable to debate. I do not want to be in a room where everybody agrees. Otherwise, we're all going straight to Abilene, if you know what that means. Like, so I think people all day long. I agree.
I think, of course, people, but I feel like different type of information has different value. So Twitters of the world does give you a lot of gossips and does give you like what's happening where, like an overview based on when you're sitting on a flight or you're sitting in an Uber. But for me, when it comes to doing the deals, like what sectors, where the money is going, that really, lot of really good journalism has come out. I think Block, CoinDesk, Forbes, Bloomberg Crypto has been doing really good deep dive. Places like Defiant has been doing really good industry level reports to understand for me what I'm thinking. Are other people also thinking the same? Not. Apart from that, I think my day-to-day job is to meet a lot of founders, a lot of VCs, but because I also teach at a university, I also get to see from the academic perspective how the researchers, the cryptographers thinking, and that gives a lot of balance in planning 5 years, 10 years ahead. And at the end of the day, yes, conferences does give you what you call it, like a lot of pleasant surprises and questions to take back home and then find it with your team.
Amazing. Thank you so much, Tim, Alex, Kavita. Absolutely amazing. We could stay here the whole night. Thank you to the audience, and let's continue with the next session. Big applause.